One.
Hello, my name is Brogan Sanders. I'm with Company C for the Glo-Bus simulation. I'm with Summer Cornelius and Isaiah Jordan, my other group members. Let's dig into this. For our strategic vision, our vision is to be continue. Our vision is to continuously drive innovation by investing in cutting edge technology, become essential to our customers by providing differentiated products and services to help them achieve their aspirations. We strive to lead the market with pioneering drone and action camera solutions, powered by a commitment to excellence in research and development, ensuring that we not only meet but exceed the evolving expectations of our shareholders. Our mission is to continue to exceed the goals given to us by our shareholders' expectations. For the strategic plan and production, to start, we invested heavily in R&D, made a slow gain on that as the game continued. That helped with our overall cost of our product, manufacturing of our product as the years went on, leading to larger gains. Another idea that we had was just maintain enough workspace, the minimum workspace, as long as we did not receive a deficit in production. With so the least invested capital, and we did that. There wasn't a single year where we had a deficit in production. We were able to produce as needed for orders. So we wanted to maintain costs. That all goes hand in hand with us maintaining our costs so that we can capture as much returns as possible for our investors and our shareholders. We invested heavily in employee training. In quality and safety was a major priority so we could minimize defective product and mistakes made during the manufacturing process, helping bring down our overall cost per unit. Once again, realizing more returns. Our entry into the simulation was to build a foundation for constant growth by investing in the future immediately. We had clear expectations and goals from the beginning, and we maintained that throughout the entire competition. The closest strategy to ours that we learned about in this class would be the best cost provider. We maintained a well above average product at a competitive, most of the simulation kept it below or at market average price in both action cameras and UAV markets with an industry leading product. And then our multi-level strategy, we focused on UAV drone markets, especially in the early simulation, because they showed strong projections and therefore the highest margins. We followed the market information in each region to dictate our marketing spend in those areas. As the UAV demand fell, we pivoted and invested more into action camera markets. I'll hand it off to Summer.
Hi, I'm Summer. Um, Company A was our constant top competitor as they were always at the top of the scoreboard. Over the past 15 years, they were a constant and formidable player in our industry. It challenged us to continuously improve our product offerings and operational efficiencies. Early on, we found ourselves directly competing for market share, but as time passed, we chose to focus on differentiation rather than trying to outcompete them on price alone. We felt that Company F was our other big competitor as they were neck and neck with us several times. In the end, we found oh gosh, that went away. We found that in order to stay near the top, we needed to focus on other areas where our competitors weren't successful. Isaiah. Okay.
Hello, my name is Isaiah Jordan, and I will be talking about the challenges we faced for Company C during Glo-Bus for years 5 through 15. And here in a minute, you will see me talk about the financial aspects and the financial statements of our company. Now, one of the main ones, was getting used to the industry, and market, and paying attention, to how the market would trend in the following years. So that's important to pay attention to. You never know how the market could be in the following year or years. And also, trying to guess the right number, of increments that we expect to trend up, for our 3-year strategic plans. And what I mean by that is trying to, pick a high, low, or safe number to what we expect, EPS, stock price, or return on equity to be. Like for example, if your row is supposed to be like 50%, you shoot too high for 60, you might not never hit that. And so that's why it's always best, to keep those increments kind of smaller, safer. That way you can hit it. Whereas, hitting something too high is kind of too unlikely. Now, our achievements that we were able to accumulate were, 4-time runner-up, for the Corporate Social and Responsibility Award. We would have loved to, win at least one of them, but, we came second many times. Also, we were the company, with the highest earning rewards with 6. Pretty sure we were tied with another company, but I know we were the highest earning company with bonus rewards. And also, we were able to win the Leapfrog Award one time. It was in a little bit of the later years of the simulation, but, we were still happy to achieve that. Now, our financial strategy. In the early years, we tried to in the early years, we tried to avoid financial trouble, so that's why we issued a 25-cent dividend, which seemed to boost our credit and image rating early and pretty quickly. In the later years, we were able to, reinstate our dividends and plan to, increase more over time gradually, and help boost investor confidence. Here is our net revenues in the millions. You will see down there my laser pointer that I had earlier was using. You can see the trend line going up, and then you see an orange down here are the years. Now for 5 through 15, everything's looking good. And then we kind of, in year 11, kind of hit a little bit of a down year, as as you can say, or as we should say, as company, managers, we had to come together, see what we did wrong, in that year, what happened, we did not meet, i.e., investor expectations, what went wrong. So that's what we did. We came together and we figured it out. And then as you can see through the trend line, everything keeps going up. Here is our EPS, or earnings per share, for years 5 through 15. Again, the years are in those, orange kind of blocks in the graph. And again, you see the trend line there going up. I have my laser pointer there again. And then in year, 10 through 11, you see we had a little bit of a fall off, almost about 50 cents, about 47 cents there. Again, we had to do something that was really our only, I guess I'll say, bad year or down year. So it was just something that we um, kind of, shot ourselves in the foot on, or just maybe didn't pay attention to enough that year. But as you can see, we figured it out and we came together and everything went up from there. Here is our return on equity. Again, the orange bars are the years 5 through 15. Again, I have my laser pointer here pointing that out. That again, our only issue, was in years, going through 10 to 11, was a little bit of a drop off. But again, like I said, we figured it out. We came together as a team. We're a little bit more patient, I guess you could say, that time around, because we maybe got a little bit, too big of a head of our shoulders, thinking, we got it. But you never know with the market. You never know how things can be. It can crash just like that. Here is our stock price. For company C, again, our only bad year was year 11. You can see the trend line there going up, up, up. But again, we solved those issues. We slowed down a little bit, did a little bit more patience because we really didn't expect the industry or market to really affect us like that for that year. And again, we were very happy with the outcome in the end. Here is our credit rating. You can see, years 5 through 15, B, A minus, and then after that it goes up, up, up. And then, of course, depending on, investor expectations or what investors expect, it can kind of go back down again, depending on the market. You never know. That's why you see A. But I know in our final year, we wanted to end, at the A plus, definitely. And that's what we did. And of course, we cannot be happier. Here is our image rating. Again, our only, down year was at year 11, as you can see by the trend line. And we wanted to aim for, 85 or higher in year 15, and that is exactly what we did. We hit the marks we wanted. Here is our EPS for years 9, 10, 11 from the first 3-year strategic plan. Now, this is where, we messed up, as you can say, how I was talking about, making sure to pick the right increments and just still pay attention. As you can see, the stock price is definitely wrong. For 9, 10, and 11, they're not supposed to be, $5 or like that. It's supposed to be, in the 100s, 200s, 300s. And we did end up getting, a lot lower score than what we would have hoped. But the second time around, we did a little bit better. So yes, here is our performance targets from the first year for years 9, 10, and 11. Here is our performance targets from round 2 from the strategic plan. And again, you see, we finally got the stock price correct for the target years, what we wanted in that area. But as you see, our row return on equity, we kind of had those increments of 5, a little bit too big. You see 50, 55, 60. For year 15, our, row wasn't even close to 60%. So again, that's why it's always important to, be careful and still pay attention. Now, here are some lessons learned. When it comes to deciding prices and placing discounts on your products, always make sure that you will earn a profit. If you end up winning that bid, by selling, the camera and drones, for more than what production cost. Now, the last lessons learned, probably, a couple of the most important ones, always keep, a keen eye on your competitors, strengths and weaknesses. Again, you never know how the market can be. You never know if they're having an up year, down year. Make sure to always pay attention to the CIR, the Competitive Intelligence Report, and C&D Journal, the Camera and Drone Journal. Again, your company can have peaks and valleys. You know, some companies, may not have peaks and valleys, and it is best to see, where or how the problem occurred. And again, it's still good to check on competitors, how they did as well. That is the end of Company C's Glo-Bus presentation for Industry 2. I'm Isaiah Jordan, and I am with, my company co-manager Summer and Brogan. If you have any questions, please leave them in the comments below in the YouTube video, or please leave them in Blackboard comment section.
Thank you.
Thank you.